This is your Wall Street wake-up call. Oil prices rising on Friday after 6 straight sessions of declines, but of course investors have their eye on next week's Brexit vote. Let's bring in Spencer Welch now, an oil analyst with IHS in London. So, Spencer, oil prices are volatile, of course, ahead of that big referendum in Britain next week. What does a Brexit mean for oil prices?
I think it's as been happening over the last couple of days. There's uncertainty around what a Brexit might mean, a concern about potentially reduced trade. London is obviously a financial centre, and so whether if the UK was to separate from Europe, how that might affect London. So I guess there's uncertainty about the unknown, and that is pushing down oil price.
So if we do see a yes Brexit vote as opposed to a what they're now calling Remain, would you expect oil prices to drop?
I think it's likely they would drop a little bit more. Obviously, some of the fall is already being built into the price right at this moment. But because there is uncertainty, there's an equal likelihood of Remain. If the Leave vote did take place, then I think oil prices would decline a little bit more on the back of that.
Now, Brexit could also cause plenty of volatility in the stock market, and do you think that volatility would be reflected in oil prices since, stocks have been following oil?
Absolutely, I think you're totally right. Stocks and oil and trade and economics, they're all effectively tied up together. So the volatility and concern about what Brexit might mean to other commodities will equally impact oil. They'll both impact each other.
And would you say the major factor affecting oil right now is Brexit, or would you point to the supply outages in Nigeria and elsewhere that we've been seeing for quite a few weeks now?
I would say definitely, it is Brexit. As you said, we've had 6 days of drops. That kind of started off with the stock report, the midweek stock report in the US, which did see a fall, but not by as much as was expected. Less than a million barrel decline, and more was expected. So that started pushing the price down, and then Brexit fears have continued to push the price down. The outages you mentioned, that oil is starting to return to market from Canada and a little bit from Nigeria. So that's putting a little bit more supply onto the market of oil that had been taken away.
And that said, where do you see oil prices going in the coming months? Will we get back to $50 in the near term?
I think so, yes. Fundamentally, the market's been oversupplied for more than 2 years, but right now the oil market is back into supply and demand balance. So that's positive for prices, and we expect the market fundamentals to continue edging the oil price up. At IHS, we expect an average in the second half of this year of $50 per barrel, compared with $40 per barrel that in the first half of 2016.
All right, Spencer Welch from IHS. All issues will be following. Spencer, great to see you. Thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.